Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im Zuhörermodus.
So, a very good afternoon, ladies and gentlemen. My name is Philipp Bundenberg, and I'm happy to welcome you once again to a BAI webinar. Today we are talking about the aviation industry. So our topic today, ready for takeoff, aviation finance in a post-pandemic world. Obviously, the title may be misleading. We are, I guess, at least in Germany, in the middle of the pandemic, but I'm glad that I may welcome John Morabito today, once again from EnTrust Global. John is Managing Director at EnTrust Global and Portfolio Manager at the firm's Blue Sky Aviation Strategy. So maybe you may remember we were able to listen to John at the beginning of the pandemic in another BAI webinar. And so I'm excited to see what updates he brings today about the aviation industry. So obviously we all know that the COVID-19 pandemic has had an enormous impact on the aviation industry and probably still has. So John will show us the case. So especially in Europe, I suppose many of us were maybe too optimistic in our COVID recovery forecast, and yeah, the present catches up with us and teaches us better, especially in Germany. So, which is also true for the airport capacity. John, correct me if I'm wrong, but I recently heard that the capacity is still only 50–60% of the pre-COVID capacity level. So one may ask the question if the peak of airports lies in the past. So before we start, just let me give you a brief update on our association's work. So we have another webinar in 2 weeks with Jegor Tokarevich from Substance Over Form. He will talk about the CRR3 draft on alternative investments, and I can only highly recommend you to visit our homepage if you're interested in the topic. We have a lot of information for you prepared, and for example, take a look at our feedback statement. My colleague Florian Bucher comments on CR3 regarding subordinated debt, equity, and other capital instruments. So you will find the paper addressed to the Commission on our website. So John, I will hand back to you. Maybe one organizational thing before we start. So most of you probably already attended the BAI webinar. If not, you will find on the right side of the webinar tool the question or chat button. Just hit it and ask the question to John. He will be happy to answer the question in a Q&A session after his presentation. So John, hope you're ready.
Thank you so much. Thank you, Roland, and thanks to BIA. It's nice to be here with everyone again to give an update on what's going on in the commercial aviation sector. Maybe just to give a quick intro on myself for those who haven't heard me speak before. My name is John Morabito. My entire career has been in the sector of transportation, in particular commercial aviation. I started my career in 2001 at the public company CIT Group based in New York. 6 months after I joined, 9/11 had happened. So much of my career was very much built during a time of dislocation, very, very similar to what's going on given the pandemic today. During my tenure at CIT, which lasted 16 years, we ended up building one of the largest aircraft leasing companies in the world, known as CIT Aerospace. That business was more than 10 billion in assets, represented by over 300 commercial aircraft on lease to over 100 airlines worldwide. So my background and my team's background is deeply rooted in aircraft leasing and financing. CIT Group, unfortunately, was a victim of the financial crisis in 2009 and emerged a bank after that event. And as a relatively small US bank, the large aircraft leasing business that we had built really didn't fit neatly within the bank. And so we went out to either IPO the business or sell it. And in 2017, we successfully sold the business to H&A Group in China. And I joined EnTrust Global in January of 2018. Just very quickly, EnTrust Global is roughly a $20 billion alternative investment manager. The business has its roots in the fund of funds landscape. And as the fund of funds business has really kind of moved into decline over the last 10 years or so, EnTrust Global really focused on one key area of pivot, and that was around developing real asset strategies. And as you can sort of quickly see on this slide, the two pillars to our real asset strategy are maritime finance and aviation finance. One of the things I thought I would do today that's a little bit different from what I've done in the past is talk about some of the key educational components of commercial aviation and some of the common misconceptions. One of the things that's been on folks' minds, rightfully so, given the pandemic, has been, is air travel, is commercial aviation as we once known it going to go away? And in our view, the answer is clearly no. I mean, in fact, given all the experience that I've had through 9/11, through the financial crisis, through SARS, other geopolitical events, I would have thought at the beginning of 2020, as we moved into the beginning of the pandemic, that the impact on aviation would have actually been a lot more severe than what is manifested so far. And there's some similarities, in my view, to how systemically important the banks were during the financial crisis, certain banks, compared to what I've seen transpire within commercial aviation. Governments around the world have cumulatively put over $200 billion in support for certain airlines within the countries that they operate in. You saw this transpire within Europe. You've seen it transpire within the US and other regions around the world. And why is that? Well, commercial aviation is a very large, important industry. It's over $1 trillion industry. The economic contribution of aviation to various countries around the world is very important for job creation, employment, as well as tourism, and there's a national pride component to it as well. So many countries around the world want their own airline, and what you saw take place during the pandemic was a lot of countries stepped up to really help support the airlines to get through the pandemic. And one of the other things that's important is that, and I'll talk a little bit more about ESG in the next slide, but that there's a very important connectivity component in the global world that we now live in that's served by airlines, right? And you can see some of the examples in the bottom right of this slide talk about how difficult and logistically difficult it is in some countries to move around and travel. And so being able to have the ability to get on an airplane and travel is quite convenient, especially in the developed and developing world. The other point, and Philip alluded to this a little bit, is where are we in terms of the recovery? Is this an industry that's going to be recovering for a decade, or what's the story? What's going on? And I think it's very important for investors to understand that the recovery is going to be uneven, and the recovery is going to be determined by a combination of government support that was provided through the pandemic, the vaccine distribution, and whether or not you're looking at either domestic recovery or international recovery. And various regions around the world are recovering at different paces. As an example, the US domestic market has really roared back. You're starting to see intra-Europe market recover quite robustly. What's been lagging has really been international traffic, although that's starting to open up with certain routes being open, like the US, Singapore, Australia. So we expect the recovery to continue, but it's very much region by region in terms of how we think about the opportunity set. And the other thing worth mentioning, just to put it in perspective, you can see a little bit of this in the bottom left of the chart here. The aviation industry is really no stranger to these exogenous events, right? There's been over 5 decades of historical data related to how, whether it be oil crises, wars, 9/11, the financial crisis, has impacted aviation. And the one thing that has really been remarkably resilient has been humans' propensity to travel and the recovery to travel demand. And I'll talk a little bit more about that as we go through the deck. Just to talk a little bit around, a topic that gets discussed quite heavily nowadays, ESG, and what's going on with commercial aviation in terms of its role in carbon emissions. And I think first of all, what's very important is just to level set, the contribution of commercial aircraft to carbon emissions. And as you can see, carbon emissions emitted by commercial aircraft is about 2% of total carbon emissions. In the last 5 decades, as commercial aircraft technology has continued to evolve, the fuel efficiency of the engines have improved by around 80%. The aircraft that we really invest in, and it's very interesting when you think about this industry, it's really dominated by a duopoly between Airbus and Boeing. There's only about a dozen different aircraft that we invest in. There's roughly 6 Airbus types and roughly 6 Boeing types. And all of those aircraft are the most modern technology aircraft that are available. And so, our view is basically that commercial aviation continues to evolve from a fuel efficiency and an environmental carbon emission standpoint. There's a long road, as many folks on the call may have seen, airlines have started to make commitments to carbon neutrality, sometime between 2040 and 2060. There's a lot of technology improvements that have to be met in order to do that. So right now, our view is that, one, commercial aviation is moving in the right direction, as technology continues to evolve, and overall the footprint is on the lower end relative to other areas. One of the things that we've basically, kind of been saying, which goes along with the slide before this, is that, we look at the opportunity here as really transitional investments, transitional finance. So the commercial aviation industry has a dilemma, which is what technologies are going to lead to complete carbon neutrality. And that's going to be a function of new sustainable fuel technology, new propulsion, whether it be hydrogen or battery. But the reality is that, as you can see in the chart on the bottom left, the latest and greatest technology alone, if we continue to invest in it and we continue to retire older, less efficient, out of production technology, is going to, in and of itself, lead to a meaningful benefit to carbon emissions. So I just wanted to sort of put in perspective, how we think about the industry just from an ESG standpoint. One, the systemic importance of the aviation industry. I think, I would have thought actually, as we entered the pandemic, that this would have really completely crippled and bankrupted a lot more airlines. There's an interesting statistic, which is that in Europe, in the 18 months leading up to the pandemic, more airlines went away than in the 18 months after the pandemic had ensued. So there's a certain fragility to the industry, but also I think what's been very clear is that there's also a systemic importance. And again, it's not for all airlines, but for certain airlines, the major airlines, the governments have moved in a way to ensure that those airlines don't go away and have some protection. And there's really two sides on the ESG component with respect to, you know, carbon emissions. We talk about demand, and this is really where we are today, you know, and I would say in the foreseeable future, we're really focused on investing in the more modern technology assets. And then in the future, you know, I think, as I had mentioned on the previous slide, we're looking to the OEMs in terms of what the next technology step change will be. And the reality is right now is that that's not really in the near or medium term horizon. You're starting to see some of these technologies manifest in very small applications like drones or perhaps in flying taxis, but it's going to take more time to develop that type of technology for commercial aircraft. So now I'd like to just jump into a little bit more about the fundamentals in commercial aviation and the investment opportunity set before us. This is basically an industry that continues to be supported by the demand for travel. You know, and I'll just give a quick remark. In May of 2020, we launched our initial fund, and this was right into the eye of the pandemic. Some of the first investments that we made were in secondary market debt instruments that had begun to trade at pretty steep discounts, you know, given the pandemic. We bought those roughly in May of 2020. By July of 2020, we sold all of them because the market had completely rallied in a way that I wouldn't have envisioned. And I think a lot of it was due to some of what I had said earlier, government support, and the fact that it was clear on the public side of the market, the capital market side, that a lot of these airlines were not going to be allowed to fail. On the private side, however, and this is where we see a real opportunity set in debt financing, the story is a lot different, as that market has mostly been provided by banks historically, and those banks, even prior to the pandemic, have come under a lot of constraints. So basically, one of the things that we think is very interesting for investors to focus on is, on the demand side, we're starting to see that rebound. We're seeing it country by country, first in the domestic travel, and we're starting to see international travel open back up. And the other thing to keep in mind is that the industry's health is a function of the demand for travel being in equilibrium with the amount of seats that are available to fly in, i.e. the supply side. What's also been happening since the pandemic took place is that the supply side is shrinking. So out of production or older technology aircraft have continued to be retired. You've heard anecdotes about the A380 being retired, even though that's a relatively new airplane. These are airplanes with a lot of seats. The 747, which was the crown jewel of Boeing's fleet, very large airplane, out of production, being retired. And you can eyeball on the bottom right of this slide, look at the production levels of Airbus and Boeing. Boeing have really reduced the supply of new aircraft coming online quite dramatically in a way that's almost been unprecedented. And so the industry will return to health. We think it's happening now. You know, we think that within the next 2 to 3 years, you know, that the industry will sort of roar back. And that's going to be a function of people's confidence returning to travel, just correlated to the vaccine distribution. And number two, recalibrating the supply side. And on the other side of the equation, there's a separate supply and demand equation that inures to our benefit as a relatively clean slate investor that has the background of being an aircraft leasing company and is now positioning itself as a non-bank specialty financier. And so when you look at the industry, the three main constituents were the airlines, and the airlines obviously are in a difficult place right now as they continue to need capital to continue to get through the recovery. You have aircraft leasing companies, which, especially aircraft leasing companies that were very long aircraft risk going into the pandemic, they have a lot on their hands to deal with from a restructuring standpoint. And the same goes for the banks. And keep in mind, this is an industry that requires roughly $150+ billion per year. And the banks and the leasing companies are two of the major incumbent capital providers that historically provided that capital, and now they're under some distress. And so what that means is that the opportunity from a supply of capital side has shrunk at the exact same time when the demand for capital has gone up. And what that basically does in our view is it shifts the bargaining power to us as a new capital provider, whether that mean better loan to values, better protections in terms of covenants within the loans we do, and better pricing. And the way we've always really looked at this for investors is as a really good relative value trade compared to other fixed income or direct lending strategies. And it's also worth putting in context the fact that this is an industry, if you look at the data on the bottom left, this is an industry that already has gone through large restructuring and bankruptcy events. So the US airline industry, as an example, has been no stranger to that. And the data on the bottom left measures a 15-year period where various airlines were going through restructuring, bankruptcies, full liquidations. And you can see that the data here, the cumulative recovery rate, is the recovery rate essentially on aircraft-backed debt products. And our contention really is that when you peel the onion back on this industry and you realize that the asset side performs a lot differently than the airline side, and you compare those recovery rates to other equivalent fixed income, whether it be direct lending, middle market lending, leverage finance, the recovery rates and the returns are actually pretty attractive. And at the same time, the information on the right side shows a correlation and performance through a Sharpe ratio. And again, it's interesting that a lot of investors have exposure to other real asset categories, things like infrastructure or real estate. Again, aircraft financing and leasing has no correlation to those areas, no correlation to the MSCI index, no correlation to the high yield bond index. So we think that those are compelling factors that investors should think about when making portfolio allocation decisions. And so what we've really designed, given my background as well as my team's, is a relative value approach. We have the benefit in having been in the industry for a while to have very good proprietary origination channels, direct with airlines, leasing companies, manufacturers, and we look at transactions based on relative value. And we've designed a flexible pool of capital with some investors that are interested purely in senior secured debt, some that are interested in more subordinated debt, and some that are interested in outright lease equity. And each of those obviously has different characteristics in terms of risk reward. But because we see all of these through our pipeline, we're able to position ourselves to invest in any of them. And so really that's kind of the crux of what I wanted to discuss today. My colleague, Lars Zimmerman, is here featured on the deck. If folks have questions, they can reach out to them, or else I'll turn it back over to Philip and see if there's any questions from the audience. But thank you.
John, thank you very much. Again, highly interesting, and I'm already looking forward to catch up, that you can maybe give us some updates next year, hopefully in a post-pandemic world. So, but first, let's head over into a Q&A session. So I must admit, I don't follow the aviation industry regularly, but obviously I did my research for today's webinar, and I stumbled over a pretty interesting article in today's Handelsblatt German newspaper. To give you some context, I think Lufthansa presented a few days ago in Frankfurt its new flagship aircraft, the 777-9, and also a few days ago, the International Air Transport Association announced that, yeah, the industry should be or will be carbon neutral in 2050. So Carsten Spohr gave some interesting insight, I think, to Handelsblatt, and he said, of course, investors are paying more attention to carbon neutrality investments, aligning ESG criteria. You mentioned that the industry is only responsible for 2% of the global CO2 emissions. Fair enough, but Carsten Spohr said that it's more or less not possible to be carbon neutral in 2050 because there will be not a carbon neutral engine. Maybe, I guess you can comment on this. He said hydrogen will not be available most probably, and batteries are too heavy and not efficient enough to for aircraft engines. So how should it be possible to be carbon neutral in 2050? And is this maybe maybe this is not the best statement from the International Air Transport Association, and not in your interest, because of course you are talking to investors. What do you tell them about ESG alignment?
Yeah, so it's a great point. So first, just on the point you mentioned about Lufthansa, I think it's a good sign that, I mean, the 777-900, the whole series of 777s are, you know, very large aircraft. And I think, you know, as I mentioned earlier, one of the key components to the airline's profitability is the return of international travel. And so I think Lufthansa, you know, looking to the 777-9 as its flagship is a good indication that they have confidence that that international market, it will recover, and they're putting real capital investments behind that. In respect to the ESG, I mean, look, it's basically, you're at a point where any arena that you look at, whether it's automobiles, ships, or aircraft, any trains, any modes of transportation, are trying to figure out ways to be carbon neutral, right? And I think in some of those applications, it's a little bit easier from a physics, from a design standpoint to get there. So I think if you look at, you know, drone technology, right? You know, drone technology does not need to rely on jet fuel, right, to be able to operate, especially the smaller drones. If you look at, you know, on the other hand, like what Tesla and others are doing on the electric vehicle side, they're completely moving to, you know, to battery technology for the most part, right? And that's gonna be really helpful for the environment. I think when you think about something like commercial aviation and you think about the payload and size, the promises that are being made, I think, are in some ways a good thing for the industry, because it's setting a fire underneath people to try and figure this out. And the hope is that these aren't empty promises, right? That actually there's certain, you know, there's certain goalposts that between now and 2050, the airlines have to get to in order to meet progress. And you're starting to see that, you know, but it's really happening. The best way to think about it is in stages, realistic stages. So as an example, some airlines still operate 1960s technology, right? 1960s technology engines and airframes, right? The very first step, right, is to say, hey, we're going to move from that technology to the latest and greatest technology, which in and of itself is beneficial to the environment. It's a transition, right? It's not the best. It's not going from jet fuel to, you know, no carbon, but there's a step in place. So I think, you know, what we're trying to do from our standpoint is be one of the investors that's helping focus on the transition, because that's the reality of what's possible today within commercial aviation as we know it. There's a whole different arena of what I'll call early stage, more venture capital type of companies that are focused on that next technology breakthrough, whether it's a new sustainable fuel or whether it's a new type of propulsion. You know, Airbus has put out a big article that they're going to focus quite a bit on hydrogen power going forward, but we're just not there yet. But I think it'll obviously continue to be a topic of interest.
Thanks, John. Let's continue on the topic of fuel. I just read that the prices are going up again, and obviously the costs are rising for the airlines. So, but is this maybe also a chance that synthetic, more sustainable fuels are getting cheaper compared to the classic fuel, jet fuel?
Yeah, I think so. I mean, I think there's a couple of things. One, obviously, oil and the price of fuel has been relatively volatile. If you remember, the latest technology evolution for Airbus and Boeing really was the engine technology. On the Airbus side, it's referred to as the Airbus Neo, and on the Boeing side, it's referred to as the Boeing Max. It just so happened that those evolutions of technology, which created much more fuel efficiency, happened when the price of oil went down quite a bit. And so airlines kind of looked at it at the time and said, well, look, there's not as big of an advantage to this new technology relative to the previous technology, given where the price of oil and therefore the price of fuel is. On one hand, I think as you have rising cost of fuel, that makes the airlines focus more on the transition, right? Because they're going to say, look, this is not profitable to us. Yeah. And the other thing is, I think you're going to see more people start to invest in sustainable fuels. So when you have that point where you say, look, now the sustainable fuels is worth the investment because the cost of oil is going up, hopefully we'll see more investment start to take place around that.
Thanks, John. Maybe one last question from the audience. Do you plan to syndicate the loans you acquire into some form of CLO structure?
It's something that we've considered over time. I think, CLOs have been done in a lot of asset classes, but they haven't really been done in aviation. In aviation, you've seen a lot of securitization of finance, but that's more when, and those have more been issued by the owners of airplanes. So I think it's something that we would consider, but it's not core to what we're looking to do. What's core to what we're looking to do is basically we believe that there's going to be a persistent opportunity to fill a void left empty by traditional banks. And we think traditional banks, even before the pandemic, faced issues and constraints relative to how they use their balance sheet. There's Basel IV implications that are on the horizon. All of these things make it more difficult for these banks, who have been a very large provider of capital to this industry, to continue to do so. And so the thesis for us is that it's inevitable that some new form of capital has to come in. And my personal view is, what better way to do that than to have the flexibility that a bank doesn't have, and to have the experience, the true metal asset experience that a bank doesn't have. And that's what we're looking to try and do.
Thanks, John. I'm getting more questions in. You mentioned the Airbus 380. Can you give us an outlook on the Asian market? Are they also stopping buying A380s?
Yes, I think the A380 is virtually at the end of its road, unfortunately. And I think it's kind of an interesting case study, because for myself and what I've done throughout my career, we always look for assets that have what we call a very deep operator base. We like to think about these assets as flying real estate, right? And if something goes wrong with one particular airline, we're okay, because we know there's many other airlines around the world that use and can use that particular aircraft. The A380 didn't work that way, right? Because of its size, because of the infrastructure required for airports to allow the A380 to fly into it, only really a handful of airlines ever really ordered it. And so Emirates, as kind of the key customer, when it made its choice that the A380 was no longer going to be a long-term part of its fleet, that pretty much was the end of the A380. So that aircraft is moved out of production, and yeah, I don't see Asian airlines ordering it.
Okay, next one is not a question but a statement. I guess private equity is still not relevant in this industry compared to other infrastructure segments like container leasing. Maybe you can comment on this.
Well, there's been quite a bit of private equity capital that's come into this space. In fact, a series of private equity companies initially formed a leasing company known as Avalon, and Avalon was ultimately acquired by H&A Group, which ultimately acquired the CIT Aerospace business that I have been a part of for 16 years. Jackson Square, which is now part of Mitsubishi, was also originally private equity sponsored. So there's more private equity in aviation than you think, but it's very fragmented. So you have folks that focus on different parts of the industry. Some only focus on the aftermarket, right? Very old airplanes or part out. Some folks focus only on cargo aircraft. Some only on wide bodies. Some only on brand new airplanes. So I think what people started to realize, a little over a decade ago, was they started to understand that investing in aviation through the assets is not the same as investing in airlines. And for a long time, people were spooked about this industry because they would know the airline business models are fragile, airlines come and go. But as people started to educate themselves and said, hey, even in spite of that, the profitability associated with leasing and financing aircraft has been pretty stable. That's when folks started to look at this as an asset class to allocate to.
Okay, thanks. So maybe one question left. So will consolidation pace up again?
Yeah, so that's a really important point, both on the airline side as well as on the leasing company side. So one of the stories I always mention is that if you think about the airline side as the story of what happened in the US, right? And the US started as a regulated airline industry. And during that time when it was regulated, only a certain amount of airlines were able to operate, and they operated profitably because they didn't have to worry about competition. In 1978 in the US, deregulation was instituted, and that's basically when all hell broke out in the US. Competition ensued, airlines got into bankruptcy, and that lasted really up until just after 9/11, when you had the great consolidation happen amongst the US airlines, and that led to really 4 major airlines. And those airlines from then right up to the pandemic were producing record profitability. They were investment grade rated. If you look at, as a comparison, what's happened in Europe, Europe has been much more fragmented because every country wants its own airline or two. And so there's much more competition. That puts downward pressure on prices, and it creates a thinner margin for error for the airlines, which is why I made the point earlier. There was more airlines that went away in the 18 months in Europe leading up to the pandemic than after, right? So the airline industry in certain parts of the world, in particular Europe, could benefit and become stronger through consolidation. And I think in a perverse way, the pandemic has sort of pushed that along, right? And kind of made airlines think about that. And then you see the same thing happening on the leasing side, right? AerCap became one of the biggest leasing companies in the world because it acquired ILFC during the financial crisis from AIG. And now AerCap has just closed on the acquisition of GECAS, one of the other largest aircraft leasing companies in the world, to become a behemoth within the aircraft leasing space. We've also seen other leasing companies, be acquired. So we think there's going to be, this is how I sort of foresee it happening. I think that you're going to have net consolidation in the airline industry. You're going to have net consolidation in the leasing side, and you're going to have a situation where the demand for air travel continues to grow. Supply of aircraft is going to shrink, right? Just because the older aircraft are being retired, aircraft like the A380 are being retired. And when that supply and demand comes back into equilibrium, and you have these consolidation effects that are creating more health to the industry, that's going to be a really good outcome, right? So we're sort of excited to be on the investor side over the next few years with that being kind of the vision that we have down the road.
Thanks, John. I think that was a pretty good conclusion. once again, thank you very much for being here with us today, and I'm already looking forward to 2022. I hope you can give us another update, and looking forward that we are in a post-pandemic world then.
Thank you, Philip. Thanks everyone. Appreciate the time.
Bye bye, John. Greetings to New York. Ciao.